Welcome to Capital Connect, a podcast from Monark Markets dedicated to the most timely conversations in capital markets. My name is Ben Haber, and I'm the co-founder and CEO of Monark. On each episode, I sit down with the investors, operators, and builders who are closest to the issues defining modern finance. Our conversations center around three core questions: 20 minutes per episode, and a genuine exchange of ideas. Whether you're managing client capital, building in fintech, or allocating at an institutional level, Capital Connect is designed to give you the perspective that actually matters. Today, I'm joined by Ryan Eisenman, co-founder and CEO of Arch, the digital administration platform for private markets. By consolidating K1 collection, cash flow tracking, and data input from all private investments into one digital interface, Arch removes the hassle of navigating multiple third-party portals. Ryan has raised more than $75 million in venture funding for Arch, which is backed by Oak HCFT, Menlo, Kraft, and Citi Ventures. Ryan, thank you for being here.
Ben, thanks for having me. Great to be here.
Why don't we start with your background, the motivation to start Arch, a little bit about your journey so far?
Yeah, absolutely. So before Arch, worked a little bit in the industry at an investment advisory firm, but a lot of the inspiration for Arch came from a lost stock certificate. So lost some shares of Coca-Cola that I was given from my grandparents. And so then I had to manage a public market investment the old-fashioned way. Got paper dividend checks, had to get a paper 1099, and then had this realization of the brokerage accounts of today, the Robinhood, Schwab's, Altruists, and others, are built on a lot of old legacy processes that they've digitized. But that same level of digitization doesn't exist in private markets. If you invest in private markets today, you have all these different portals, platforms. You have to chase down your K1s. You have to complete capital calls. And these investments are hard to understand and hard to research. And there's a lot of information asymmetry. So in 2017, I pitched this idea to a venture capitalist who happened to have a lot of private investments. He also happened to know two great software engineers. And so it's kind of this light bulb moment of the three of you should work together. If you start this company, I'd love to back it. So in 2018, we started the year with a venture backer, three co-founders, Jason and Joel, who both are computer scientists, and an idea of what we wanted to build.
So Arch today has over $450 billion in platform assets across 560 leading allocators, including Fortune 100 institutional allocators, 4 of the top 20 banks, and 8 of the top 20 accounting firms. What do you think is resonating about the Arch platform today? And what is the rationale for why investors need another platform to manage their portfolio?
Yeah, well, a lot of our clients are also in the service of their own clients. So one thing that we do is we help unlock client service for our clients. We help them acquire and attract new clients. So if you're an investment advisor and you're pitching to a new client and they have a lot of private market investments, they can go with this sharp pitch around, hey, also we use Arch and it makes K1 season easier and capital calls and reporting on these assets easier. So it makes them look good when they're pitching. It also makes them look good when they're supporting clients because we give AI-powered insights to the advisor so that they can engage with their client and understand what key themes they need to discuss, and also creates a really great digital client experience. Because back to this Robinhood Schwab example, those are platforms that the end client can log into to understand their investments. So we give the wealth management firms and others that we work with tools that they can give to their clients to create a digital way to interact with private market investments. And so especially for organizations that are kind of in the client service business, there's this really natural draw. But then for firms that aren't, we empower investment teams to have better insights on their investments while giving operations teams a lot more AI and automation around the work that they do so they can spend less time trying to find or pull numbers out of documents.
I want to dig deeper on the sort of customer journey, the user journey. What does that look like today, both for either an advisor in this case or an investor using Arch?
So when they wake up in the morning, first thing in their inbox, there's an email from Arch, and it basically summarizes the key things they need to know about their private market investments. Did you get a markup? Is something marked down? What capital calls do you need to pay? What distributions have arrived? And then we summarize investor letters and quarterly reports and other documents where it's like it might be an 80-page document or a 7-page document, but there's some key insights you might want to know. So then you can, in kind of this one email, understand some of the work that might need to happen that day or just some of the things you might need to know about your investments. Documents are available via that email summary, but you can then, of course, log into the platform itself and go kind of work on pieces of information, see what capital calls need to be paid, or just simply like look for summaries of how much money did I put into SpaceX? How's it doing? How do I own SpaceX? Do I own it directly or do I own it through a fund or through an SPV or multiple different ways? And so as we continue to develop out the platform, we're investing in deeper analytics for our clients and a lot of AI-driven insights into the kind of factors that are driving returns for our clients.
That's super cool. So you could see both like a direct holding in SpaceX, but also like, sounds like there's like a look-through fund tool where you can see the holdings of an underlying portfolio in a fund.
Exactly, which gets to be really important. Like if SpaceX goes public later this year, we'll have a lot of clients that have a lot of direct and indirect exposure to SpaceX. So then they need to understand, okay, how exposed am I? What's the total value of my SpaceX holdings so they can decide, am I buying in the IPO? Am I trying to sell as soon as possible? And so being able to give folks data that drives decisions is a core part of our mission.
Makes a ton of sense. In terms of the data collection process, I'm super curious. What does that look like today in terms of, you don't have to give away any trade secrets, but in terms of getting access to this data, sort of aggregating it, pulling it into the platform, how does that look? Curious what that looks like today.
Yeah, well, without Arch, it is hundreds of different portals. Every portal has different ways of getting documents. Even within the same portals and same platforms, the structure of the data in PDFs is different. So we're taking this really messy process of how every private equity firm and venture firm and hedge fund sends information and creating a unified digital experience on it. One thing that we think will change also is we think the way that private equity firms and other alternative asset managers report to their investors needs to evolve, because the whole reason we exist is because that customer experience is so terrible. There are very few processes like this in the world where there's like real consumers that are buying things and are spending this much to get so little in terms of a client experience. Like every airline website and shopping website that you go to, even the ones that you think are the worst, are better than how private equity firms report. So we think that will change over time. But when folks leverage Arch, we take that entire painful experience and make it so you don't ever have to log into a portal again. We do that work for you so you don't have to. We collect your K-1s and follow up for missing documents so you don't have to. And then we deliver those documents directly to your accountant or your advisor, whoever needs access to it. So a lot of the value proposition of Arch is being able to act in the background and do work on your behalf that you otherwise don't need to do.
So I want to dig in on the private equity firm piece. Is that something I agree we will see sort of how data is shared with clients and in what format change over time? Is that something you guys are thinking about and working on at Arch today?
Yeah, it is. And this started with a lot of our clients are both GPs and LPs. So they're investing in third-party managers, and then they also have their own LPs for some of their own strategies or funds. In those cases, they're like, hey, my experience of now receiving third-party manager information via Arch is so much better than what I'm giving my LPs. Can I just upload my information into Arch for my LPs? So we essentially started to offer Arch as an investor reporting experience. It's a newer product for us, but one that we're getting a lot of interest in. So if you are an asset manager, whether you're big or small, and you need a great experience for your LPs, we now have one. And it can work with like any fund admin. And I think this also helps a lot of the fund administrators out there, because there's a lot of fund administrators that are great at the services side of their business and great at accounting and bookkeeping and bill pay and things that are needed to run a fund, but they're not technologists. So maybe they build a small portal interface, or most likely they're buying something, but we can give them something that's been purpose-built for the client experience side of this, and also work with a lot of the existing GLs and larger systems that are out there as well.
So of all the pain points in private capital markets today, and some examples might be information asymmetry, lack of liquidity, a lack of standardization, regulatory limitations or constraints. Which do you think is the single most important pain point to solve for, and why?
Well, this is a hard question because you have your most important pain point. You guys are solving a great part of this problem too. And we have our kind of area. I think what Monarch is doing around helping folks access great investments and helping firms provide great investment opportunities to their clients is really important. We're just the folks cleaning up the mess of once people invest in different products. And there's probably other people working on other pain points within this market. For us, the place that we're most focused is like, how do we unlock people's ability to spend time on the things that matter within their businesses or their lives? So it's like you shouldn't spend time administratively managing your private market investments and finding your K1s. And we like talk a lot about K1s because it feels like it's this like weirdly archaic, painful process. You should be spending time thinking about what investments to make or figuring out what kind of planning strategies to take or figuring out what managers you want to invest in and how to meet them or spending time with your network. And so we'd love to unlock more time going to those activities and less time going to the admin work of investing.
So time spent on driving better outcomes.
Yeah, it's our most scarce resource. We have a fixed amount of time. And so we should give you time back that you can spend on growing your firm, scaling your firm, finding new clients. There's so many things you can spend time on that are way more valuable than logging into an investment portal.
Hard to disagree with that. I am curious in terms of the evolution of Arch.
Mm-hmm.
Do you envision at some point in time Arch is at the front end of the customer experience, whether that's the advisor and investor and actually helping drive access to private markets as investing through Arch? Or do you see Arch's role always being sort of on the back end of the post-investment process and more around reporting and data and analytics and delivering that in a cleaner way?
Yeah, great question. So we have two things that we're doing right now that are more on the like front-facing side of the investor experience. And one outside of those two things is just like clients can log into Arch and use it to understand their investments. And so that I think is really important off the bat. But one of the newer things is we have an AI-powered investment research tool. So what does that mean? It's how do I diligence new investments? How do I keep track of the investments that I'm thinking about making? How do I keep track of what needs to happen with these investments, especially in an institutionalized way of, oh, this needs to go through diligence and legal review and pass investment committee. We're using AI to pull key terms out of LPAs and PPMs and put it into a report. So we think this can help unlock time that an investment team and others spend pouring through documents and structuring and sharing data with other members of their team. So that's one area that we're focused on. And the second is on subscription documents. So we think that we should be able to help our clients solve that problem and potentially working in partnership with other technology companies and asset managers to really understand what are the key questions that need to be answered and how do we structure them so that we can share information with the subdoc providers or share information with the fund admins or law firms in a more secure and efficient way. Because right now it seems that most of the LPs and advisors and firms filling out subscription documents are just struggling with that process, and it's really painful. And even firms that on the GP side that are adopting subdoc solutions, there's dozens of them, so there's no standardization there. So we think we can help with like the LP side of this equation and standardizing that pain point.
How long do you think it takes to eliminate subscription documents entirely?
I mean, I think things like subscription documents never truly go away. And same thing with like normal documents that we're collecting. There's always going to be some new manager or small manager that does things their own way with their own format. So we've built Arch to be able to handle the long tail of these different types of documents. But I think you can also, and we can do a lot with AI to take things that are truly unstandardized and at least create a structured process around it.
I think I read a post or heard Bill at Apex, Bill Capuzzi, say something similar around using AI to not necessarily fix all of the structural problems in private markets, but to understand the different sets of documents and be able to normalize them, which I definitely think makes sense, especially for the long tail. I'm curious, we're using AI a lot to build code internally, primarily Claude. Is that what you guys are using for the AI tool, or do you have your own model? How did the sort of development of the AI research tool come about, and what's kind of underneath the hood there?
Yeah, I mean, there's so much happening in AI at Arch today. So we're using AI, of course, for software engineering and QA processes. We've been doing AI for years now. So we introduced this AI summary probably in 2022, maybe 2023, that just took like an investor letter or a quarterly report and gave the like TLDR on what do I need to know about this document that was emailed to our clients every day. And then that's gotten more sophisticated over time. Now you can talk to investments, talk to documents, see how things are summarized. And then this investment research tool does a lot of different things. So it's like taking information out of the documents you have and pulling that into reports, or out of your notes and pulling it into reports, but also going out and like being able to create a deep research report that gets added to like an addendum of an investment memo that you might pull together. So there's a lot to do with AI and a lot more to come, and lots of different applications there.
On a personal level, this is something I've struggled with. I'll give you the 30-second version of my journey with AI. I think maybe 8 months ago, I was completely against it. And when people on our team would, use AI to write something or like write a document, and you could tell it was AI generated, I was generally pretty upset about that. Now, a lot of the work I do is, leveraging Claude. It definitely speeds up output. But I am curious because, I go back and forth on this a lot. When you sit down and you write something yourself and you really deeply understand the context and you do the research yourself, and you produce a piece of writing, for example, like I think you do get a much deeper understanding of that subject matter.
Totally.
And so I guess I'm curious, when you do your own writing, whether that's investor letters or updates, I'm sure you write emails to the company. Are you still doing that yourself? Are you using AI to supplement it? What does that look like in your own process?
Yeah, I agree. I think like we don't want to lose the creative process, and also don't want to lose the ability to really like think and synthesize information. So I think it's really important to still hold the pen, either like in the initial drafting process and especially in the editing process. I think there might be places where it's like, oh, I need to figure out this point and research it or understand something to pull into this letter. And so I think it's using AI as like a tool and a solution. Or there's times where it's like, oh, I need to write to this airline about how this thing was broken. And I think for like simple things like that, it's like, okay, I can create like a 5-word prompt that creates the right email that can go as like a customer service outbound email. And I think that that's pretty useful. But I think there's a lot of heart that you I think need to put into things. And so it's making sure that your communication and thinking doesn't lose that heart and that ability to like actually reason.
So as private markets continue to become more accessible to retail investors, and this is definitely a trend and a wave that we're seeing both from, I think, the GP side looking to access the wealth channel, ultimately self-directed retail, and from the retail investors and advisors, looking to get access to different private investments. I'm curious, which aspects of private markets do you think will remain unique as the infrastructure develops and the industry develops, and which aspects do you think will ultimately resemble public markets and the way that the infrastructure works in public markets today?
Yeah, well, I think you're going to have a fair portion of the private market assets that are kind of like commoditized, more like beta access to private markets, meaning I might just want to have real estate or private equity exposure, and I want to track whatever the benchmark is. Like benchmark investing in public markets has become pretty popular, where instead of choosing individual stocks, I might just buy the Qs or the S&P 500 or something that like tracks the market and gives me market return. So I think a lot of just successful investing is being in markets for a long period of time and choosing the right markets to be in. And then there's the element of private market investing, which is like chasing alpha. And I think alpha is pretty hard to find, and it's pretty hard for people to like choose investments that are consistently better than the averages. But there are places that you can go to find those types of investments. So I think that will always be there. It's like if you want to invest in Sequoia Capital, it's like pretty hard to get them to take your money, especially if you're not a large charitable institution. And so like there will always be this dynamic of supply and demand, but also like constrained supply and demand in private markets, while I think there will also be like the large asset managers that are able to deploy huge amounts of capital and take retail money and then invest it in kind of the market indexes to get market returns.
I definitely agree. I think, we are seeing this trend of, evergreen funds being notable from a lot of the largest GPs. And, there's a barrier to entry to even create an evergreen fund, right? You need seed capital, you need a notable brand name, and then you need distribution in order to really build a large scale product like that. And so I'm assuming that's sort of what you mean by more the like private markets beta trend relative to maybe a Sequoia Capital being more of like a private markets alpha.
But I think what you guys are doing also on giving folks access to like late stage tech names through SPVs is super interesting, because this is a place where you might have conviction that Anthropic is a great company and that you want to invest in Anthropic. But if you're an individual or someone that like doesn't know the company Anthropic or the leadership, it's like, how do I get access to Anthropic? So I think you do need players in this market that will like create the ability to access these large late stage names, especially when they're raising lots of money and there's lots of potential supply to invest in. So I think that's like a really important utility for private markets to thrive in the future, and for people to participate in the upside of private markets.
I definitely agree with that. And I think we're seeing a lot of demand from especially individual investors to try to get access to later stage private companies. I'm curious your thoughts on that, actually, because I think, there's sort of this idea generally in private markets that, the harder something is to get access to, it's probably a better investment or has more alpha. Mm-hmm. Do you think that that's true? And do you think that that generally holds true? Or do you think that the difficulty of getting access to something actually does not maybe directly equate to the return profile or how good of an investment it might be?
Yeah, I think this is a yes and. Like, I think it probably is like a good general truthism. But I think there's a lot of manufactured scarcity within private markets. And also there's like, just because something's hard to get into doesn't mean it inherently is a great investment. So there's nothing wrong with tracking the S&P 500 and making 7% a year, but I think there are some great returns in private markets, and figuring out the right way to access the markets without adverse selection is, I think, a hard thing, but a really noble cause, and one that if folks figure it out will create a lot of value.
Absolutely. Yeah, I mean, you see this, even probably the most notable example is with SpaceX, where, it's the largest private company. It's one of the largest companies in the world today. It is the most liquid name, or one of the most liquid names in terms of secondary liquidity, even though it's still private. It probably has the most SPVs invested into SpaceX, and sometimes, in layers as well. But, there are people out there that are arguing that despite all of this demand, it's actually maybe, overvalued at its current valuation. And maybe there is some manufacturing of hype that has gone into it. So it is maybe the clearest example. And I don't actually know, to be honest, which side of the coin I'm on this, because I think with a name like that, especially, and we'll see in a few months once it IPOs, how much public market demand, how much true retail demand there is. We certainly see demand for access. Is that a good thing at this valuation, at this price? I think is not a question that I know how to answer at this point.
Luckily, we don't have to wait too much longer to find out. But it'll be really interesting to see when SpaceX goes public, when Anthropic and OpenAI go public. What does happen? Is it a good buy at $2 billion, or is it a sell at $2 billion? I think the only thing that is a true certainty is that there are no certainties. And so there are no like surefire ways to absolutely make money in markets. And I think that's when people get in trouble, when they think that like Bitcoin only goes up, or certain stocks only go up, or this private market manager will only make money, and markets have cycles. So I think diversification is kind of always a good practice within any type of investment, investing private and public.
I like to always understand, when I talk to founders, CEOs, who is your true customer with Arch?
Yeah, the thing that we really love is we get to serve a lot of different stakeholders. So you mentioned in our intro, we serve like a Fortune 100 insurance company that has tens of billions of dollars of alts. And then we serve individuals that are just making their first fund investments. And we'll support the operations teams, but also support the advisor and the investment team and the individual wealth holder. So we really get to think with all these personas in mind. That's why we started to build different modules and tools that some clients will use and other clients won't. But it's all built around this like core platform of the things that most investors in private markets need, which is organization, it's time back, it's not having to chase down documents, it's digital data instead of PDFs, and it's like key, easy to find insights. So we really think about like a lot of these different personas. We spend a lot of time though in the investment operations role of thinking about folks that oftentimes don't get invited out to dinner or don't get software products built for them, but are doing the vital work of how investments are made and understood and reported on. And we love working with those clients and partnering with them on how can we make our current platform better, but also like what's the next thing that we can build that makes their lives easier.
That makes a lot of sense. I guess as we close out, where can people find Arch today? If they're interested in learning more, how can they get in touch with the company?
So we are arch.co, the .com coming soon. So if you go to arch.com, it will work. And then we're also on LinkedIn. We're on Twitter or X as GotK1s is our handle. And then we're based in New York City. So if you're in New York, come visit us.
Amazing. Well, Ryan, thank you so much for joining me. It's a pleasure. Really enjoyed having you on Capital Connect and look forward to seeing Arch as you continue to grow.
You too. Thanks, Ben.